So I'm live. Hello to any of you who slowly start to tune into this. It's nearly 4:30 Thursday afternoon. I thought I would jump on and just start chatting. First thing, as of Monday, I'll be working from home, as will just about most of the office. So I thought what I'd look to try and do, and this is the first thing I want to talk about, is maybe try and do a daily live chat with someone, anyone. If there's anyone out there, if you're either watching this live now or you're catching it on the replay, drop us a comment or hit me up directly, send me a direct message, and maybe we can try and organise a roster. Most of us will be working from home, and we're all kind of craving some interaction. So let me know if you want to have a chat. It doesn't have to be about anything in particular, but we can have a chat and some others might get some value from it. The other thing that I want to talk a bit about is just, I guess, what's going on a bit at the moment. If you're on LinkedIn, if you are on the internet at all, if you've got emails, I'm sure you've probably seen the Reserve Bank cut interest rates again today. I don't want to get into that. There's plenty of other content that you can see around that. But what I wanted to talk about was a few conversations I've had with friends, with clients, about trying to invest during these times, and some basics to keep in mind. I've got some notes here. If I keep looking down, just referring to my notes. So I guess you need to get the basics right to begin with, and this is whether we're going through times like this where share markets have fallen incredibly and we're seeing these huge wild swings from one day to the other, or if we're in much calmer waters when things are moving along sideways, or like we saw in the earlier part of 2020 when stock markets were going up and people felt like they were missing out and there was this kind of rush of money into markets. First and foremost, you need to be able to protect your income. So either your ability to earn an income, or if you're older and you're setting up your investments, set them up so that you can continue to live off them. What I want to talk about here is those that are younger and looking to take advantage of markets whilst they're down to try and build some longer term wealth. This is an incredible opportunity. Now, it might get a whole lot worse after watching this video, sure it could, but with a bit of time up your sleeve, I'm sure there's plenty of money to be made and earned over an extended period of time. So the first thing is, if you are at all worried about the reliability of yourself to earn an income, so if you are in a business where you are seriously worried that your income may drop for a period of time, whatever that looks like, whether you think you might be made redundant or you run your own business and your income is at risk, you really need to work out, is actually investing appropriate for you at the current point in time. So first and foremost, you need to be able to make sure that you have a regular income that keeps coming in. I had a question a little while ago from someone saying, should I be buying some shares to try and offset any potential drop in my ability to earn an income? And that's incredibly dangerous. I guess if the stock markets over the last couple of days are anything to go by, you could very well go and buy a handful of shares only to see that you lose 15 or 20% over a couple of days. That's going to hurt a whole lot more than a few dollars in dividends that you're going to earn. So first and foremost, your ability to earn an income. The second thing that you need to be mindful of is that if you do go and start to invest, chances are you're probably going to get the day wrong. Hey Mitch, how you going? You're probably going to get the day wrong. So you might go out and buy some shares today. The share market's probably going to drop tomorrow. Or you decide, hey, today's the day that I'm going to buy the shares, and today's the day that the share market's actually gone up and you feel less inclined. So I guess go into doing whatever you decide to do, thinking that today is probably not going to be the best day for me to possibly buy shares. You are never, ever going to pick the bottom, just as you're never, ever going to pick the top. The hardest thing to do is actually start to do something in the first place. So it's much easier to keep doing something, but taking that first step and investing and doing something is always the hardest part. My guidance to clients at the moment is to, whilst we're seeing incredibly wild swings in individual share prices at this point in time, any new buying we're doing is very limited to individual stocks, not so much of an individual stock basis, but more of an index and ETF type approach, where you take away the risk of getting it, unfortunately, getting it wrong for an individual stock, but you decide, you decide that you want to you just get exposure to share markets in general. So take away that stock-specific risk, more just a market exposure is what we're generally trying to chase at the moment. You can't control share markets. So if you are getting into this and if you are new, as I said earlier on, this is an incredible time to start to do something for those that have the appetite for it. But also understand that you can't control things. All you can control is your reactions to the news cycle, to your emotions and those kind of things. You can't control whether the share market goes up or down. So I think you need to just appreciate that you can't control those things. All you can do is just keep going, follow the process, and in time you will likely do quite well out of it. This tends to become, and I've used this phrase with a lot of clients in the last little while, this tends to become a game of whoever can hold on the longest. And by that I mean you're in a position where you have enough income from some source, whether that's work, other investments, whatever, that you can continue to live a particular lifestyle without worrying too much about whether your shares are all the way up here or if they've collapsed and they're all the way down here. Whoever can hold on the longest and is in a position to continue to hold those shares for an extended period of time, they're the ones that will reap the rewards. All of this selling that's going on at the moment, just remember there's someone on the other side of that trade. So for someone that's considering selling their Westpac shares today, for example, or whatever it might be, pick a name, whoever it is that decides to sell their shares, on the other side of that trade is someone that's buying. So you've got someone over here that's panicking and said, enough's enough, I can't take this anymore. On the other side of that equation, there is someone that's buying and thinks this is the best time ever to buy. So remember that. Try and hold on really for as long as you possibly can. Also, if you are stepping out and looking to start to invest and take advantage of share markets as they've gone down to the extent that they have, remember that you can't have exposure to the potential gains without really having exposure to potential losses. So I've had a few conversations with different clients around this same kind of topic in the last few days, where they're saying, look, their investments are going down. Yes, they understand that things are going down, but they're looking to get some type of, they want all the growth, but they want a limit in the loss. And so that's something that everyone needs to understand as they start to invest and as they may start to take exposure to this. So there's a lot going on. The world is changing at an incredible pace at the moment. There are some people that are really struggling or really worried that the future, the not too distant future, will be a real struggle for them. And then there are others that are doing incredibly well on the other side of that. So I guess in all stages, there's winners and losers. It's difficult balance, obviously, there. So I'm rambling a bit now, but recapping on what I said right at the start, if anyone is interested in just having a chat, it doesn't have to be about financial advice. It can be really anything. What I thought I'd do is maybe try and tee up, if there's enough people, a daily chat, kind of midday, 1 o'clock-ish, Melbourne time. We'll jump on here. I'm using StreamYard at the moment for this. We can jump on live, have a chat about whatever's going on in your life or your area of expertise that may be of interest to the broader LinkedIn community, whilst everyone's chowing down on their lunch and working from home. So stay safe out there, everyone. If you've got any questions, reach out. Looking at the comments here, there's a few people. Mitchell, looking forward to your video at 4:30 your time, probably as I'm walking to the train station tomorrow morning. I'll catch that. Linda, thanks for tuning in. Chris, game of chicken, sort of. Yeah, it's whoever's, I guess, brave enough to buy. And as I said earlier on, know that if the day you buy, there is a high chance that it might go down a bit further the following day, but you're never going to know where the bottom is Yeah, so that's it for my live. I'll check in again in another couple of days. As of Monday, I'll be working from home, so my backdrop will probably change a bit. Chat to you soon. Thanks.